G'day traders. On the Monday market update, we mentioned that there was a lot of risk events that you'd have to navigate during this week. And certainly so far, the market has certainly delivered with lots of volatility. The first thing that we mentioned on Monday was obviously the heightened tensions in the Middle East and the fact that Israel was blaming Hezbollah for a bomb attack that killed 12 children, and that the risk was that Israel would retaliate. So overnight, we actually did see Israel retaliate, and they sent a bomb into Beirut, targeted missile, and gold did exactly what gold's supposed to do. So it shot back up, and we're seeing gold now trading back above 2,400. We're seeing a lot of client interest to buy gold on dips. So certainly, under 2,400, I'd imagine those dips will be shallow. And then also with gold today, later on tonight, and we'll talk about this, is that we've got the FOMC, and certainly if FOMC kicks the US dollar, that's going to be also beneficial for gold. So at the moment, it'd be very brave to be selling gold, and certainly there is a risk premium built in with the war tensions and heightened risk tension in the Middle East. So we could see much higher levels in coming sessions. Locally today, we've finally got the Aussie Q2 CPI that the market has been waiting some time for. Look, this is a huge number for Australian markets. In that, basically the market is worried that the print is going to come in hot, and it will make the RBA raise rates early next week, when they meet. So look, if that print does come out hot, obviously that's not going to be good for the Aussie ASX. It's currently actually trading surprisingly above 8,000 going into the number, but a hot print certainly will get that a lot lower. Look, the Aussie dollar has been under a world of hurt in the last couple of weeks. It's actually trading around 65.40 going into the number. I'd imagine if it is a hot number, that will see, at least in the short term, a decent spike in the Aussie. We'll see how that number comes out in the next half an hour. After that today, we've also got the first of the central bank meetings. We've got the Bank of Japan meeting. Overnight, we actually got some news that a leak that the actual Bank of Japan rate hike could actually be 15 basis points. So the market was actually looking for the Bank of Japan to raise by 10 basis points. But this leak now that was going around markets overnight hit dollar yen actually quite hard. Dollar yen was trading up towards 155, and we're trading now down towards 152 even. So we've lost almost 300 points overnight on the back of this leak. Look, there's no time for the actual BOJ when it comes out, but it'll come out later on this afternoon. No doubt if that leak is realised, potentially we could see some more selling dollar yen and take us down, maybe down towards that 150 big psychological level. And if that's not all, to end the day later on, we've got the Fed meeting, the FOMC, and the big question there is whether or not they are going to prepare the market for a September rate cut. So look, if they do that, obviously that's going to be market friendly. We've seen a lot of volatility in the equity markets, so that may stabilise that a little bit, help equity markets and risk in general. And then also, if they do prepare the market for the rate cuts, it might also kick the US dollar. So, we might see some broad-based US dollar selling to go with it. But certainly, look, nothing's certain. Powell certainly does have time to prepare the market for the September rate cuts at the Jackson Hole central bank meeting in August. So if Powell doesn't prepare the market for rate cuts, certainly that is not going to help markets, and we could see some big risk selling across the board. So look, at the moment, the markets are certainly volatile. They are dangerous markets, so it might be a good idea to keep positions tight. Good luck with it all, and we'll check back in soon.